Today is Wednesday, December the 10th, 2025. As expected, today the Fed cut rates 25 basis points, and we have silver closing close to $62 an ounce. So we're going to go over the precious metals peak indicator scorecard. We're going to talk about how the momentum traders, the Momo traders, are not even involved in this sector, and I'll give you some anecdotes on that. And then the coin of today, the spotlight, is the 2022 Libertad. As expected today by most market participants, the Fed cut rates 25 basis points. But what we have on the horizon on Friday, December 19th, is the Bank of Japan's making a rate decision. And that's going to be the night of the 18th, the Thursday, when we'll hear that news here in the United States. That's real important. So I'm going to talk about that as how that relates to the yen carry trade, but we'll talk about that a little later on in the video. Right now, I want to focus in on the precious metals peak scorecard indicator and also talk about the momentum traders that are typically out in the market and get attracted by what I talked about in the last video, the wealth effect. So let's start here with the scorecard. Gold ended up today at $4,227 an ounce. Silver almost reached 62 an ounce. It had closed in at 61.85 cents. The gold-silver ratio has broken below 70. I think that's the most important thing. The momentum is really shifting there, and what that's highlighting is that silver is going to outpace gold in gains. It typically does when that ratio begins to accelerate to the downside. And then finally, the Dow to gold ratio is at around 11.3. The other thing that was interesting to me that they talked about today, the Fed says it's going to buy 40 billion of treasury bills in the next 30 days. And I mean, they love to put out these little cutely crafted narratives, but that's essentially saying monetizing the debt. That's money printing. There's no other way. I mean, they're not going to go out and say that, but that's essentially what they're saying. Still printing money. With silver at new all-time highs, everyone's wondering where we are going in the short term. And what I'm illustrating here on the screen is a Twitter post from Jesse Colombo. He kind of posts a lot of technical analysis charts on silver, gold, and miners. And what he is highlighting here, this is a daily chart. So this is short term. This is something that's going to pan out in a matter of weeks. It's showing a bull flag, and we've broken out of that bull flag. And the target, based on the breakout target of this pattern, is $72 per ounce. So that looks like a high probability event in the short term. I want to share with you and inspect closely another chart from another member on Twitter/X. And I regret not mentioning him in my last video when I talked about some of my favorite technical analysts from Twitter. His name is Value Seeker. And this is his chart. I like his content because he does a lot of charting of adjusting asset classes by the money supply. And what he does in this one, he zooms in closer because he has a variance going back several decades to the 1980 high. But this is basically the silver price adjusted for the M2 money supply, highlighting what the high of 2011 would be in today's dollars. And the high of 2011 adjusted for the M2 money supply in today's dollars is $122 an ounce. In terms of time scale, this one is different from Jesse's chart, where the candles here are a month each. So we're looking at months ahead. This is not something that's going to happen in 1 month or 2 months. This could be the next 12 months. And so he has drawn a red line here that's approximately in the upper 50s. And this goes back to 2011, 2012 at a price level that was once support on the monthly level. And that since then, when it broke below it, it became resistance. And it just broke through resistance. We're at almost 62 an ounce. So on a longer term horizon, in the months ahead, probably like a year ahead, maybe 18 months ahead, we're looking at as much as 122. And then you got to think maybe even higher because the M2 money supply, they keep increasing it. They almost always increase it. There's momentary drops, But the Fed is always printing money. So it could be when we adjust it with a higher multiplier, when they publish the next M2 money supply, it's going to be a higher number. But for now, we say, approximately in the next 12 to 18 months, we could be up to $122 an ounce. I was wondering, and you're probably wondering, how are we going to get to $120 an ounce in a year to a year and a half from now? And the one thing that comes to mind, a lot of people keep talking about the industrial demand for silver and that there's been a deficit over the last several years. But this had me thinking to when I first got in the market and I was long titanium and I was analyzing the aerospace cycle. And I see a similarity there. And let me explain to you that analogy. In that titanium bull market that started after 9/11, that was kind of like the absolute bottom. And then the demand slowly built up. What happened was in the titanium industry, you kind of have a market for scrap. Kind of like on the silver side, you have a market where jewelers are buying jewelry and things, and they're sending it to refiners, and refiners are turning the silver into high purity or into the purity needed for industrial needs and investment needs. And in the titanium market at the time, there's a scrap market. There was a whole lot of scrap available where then end users or middlemen didn't have to buy the raw material and get titanium created from scratch. They were able to go into the scrap market. And what happened back then that made titanium prices shoot up quite vertically, which is very similar to what's going on now with silver, was the Chinese were really expanding. They were buying up all types of resources all over the world, importing stainless steel, iron, titanium. The Chinese basically bought out all the titanium scrap out there. So then when the aerospace demand showed up, there was no cushion of a scrap market to kind of digest. And so the price just took off. So the analogy to right now, and everyone's talking about industrial demand, the monetary demand for silver trumps industrial demand. If you go back to the prior bull markets in silver, it is the investment demand outpaces by a lot the industrial demand. And that's what's going on here. Basically, you have AI expanded, the electronic cars expanded, solar panels expanded. So they have kept pressure on the equivalent of the scrap market, where you have refiners refining jewelry and whatever other sources of silver and providing it to them. And the mines, they're absorbing all the mining surplus, and so there was a deficit. You essentially have all these industrial users, they soaked up what should be a cushion. And since it's all been soaked up, you now have the investment demand with no cushion. And so prices are going absolutely vertical right now. It is investment demand that supersedes and trumps the industrial demand. As I process all that, I think to myself, okay, that's probably good for a run to maybe 80 to 90, but I feel like something is missing. And I've been asking around, I'm analyzing crowd psychology, and I'm wondering what's going to get us into the triple digits. And this is what I think. What I think is missing, and I alluded to it in the last video when I talked about the wealth effect, and what I mean by that is 2026 year is going to kick off on financial media, CNBC, Wall Street Journal, Barron's, etc. There's going to be a lot of talk about, silver has doubled, more than doubled in 2025. And your quote unquote momentum traders, people that have that fear of missing out, they're going to start to take note and say, wow, look at all those gains. I want to get in on that. And the best example of momentum traders, is the Wall Street Bets crowd. And so here you're seeing on the screen 2.6 million, but that's 2.6 million people logged in actively right now. The overall community is over almost 20 million members. They're at 19.6 million members. These people loathe gold and silver. It is very rare to see a post on gold, silver, or miners. You're kind of seen as a pariah if you start posting about that in here. This is the big crowd, the Momo crowd, that is bidding up your AI stocks, your Tesla stocks, your Bitcoin. This is what they are in. This is the crowd that first started with the GameStop, and they helped generate the gamma squeeze in GameStop, and they got into AMC. But I mean, look at AMC now. It's in the dumps, and a lot of the people in here rode AMC until they were broke. And I'm thinking, what if the AI bubble doesn't burst right away? What other catalyst is out there that could drive this crowd towards gold, silver, and the miners? And I'm looking at Bitcoin. This Momo crowd has generally referenced gold and silver as boomer rocks, essentially an asset class associated with only boomers buying them. And I mean, I'm not a boomer, so that's quite a bit of a generality. But I wanted to highlight a chart from Northstar, whom I highlighted on my last video. And he does a lot of good charting. He has ratio charts of Bitcoin to gold, Bitcoin to silver that are showing breakdowns. And this one's all showing a breakdown on Bitcoin. And right now there's a bear flag developing that he's highlighting in this chart. And if this breaks down, we're talking about the 60,000s. So between the wealth effect that's going to take place in early 2026, the potential for the AI bubble to burst, the potential breakdown of Bitcoin, those are catalysts that could drive this crowd to finally go long gold, silver, and the miners. I thought I'd share one other anecdote because some of you might say, hey, Titty, that's a cute hypothesis, but you got anything else potentially to back that up? And so I have a very close friend. He is in the card industry. He's very involved. I do believe he has a very minority stake in the company he works for. And he's very involved in social media. He's even part of huge Discord servers. And in these Discord servers, you have some smart people that, they're making profits with sports cards, with Pokemon cards, and other gaming cards. And they don't reinvest 100% of their profits right back into the cards. They take a chunk out and they invest in stocks, in bonds, and whatever asset classes. And so in these Discord servers, they'll have a channel dedicated to investing. And sometimes he's sharing screenshots with me saying, hey, what do you think about this? And what do you think about that? And as silver has started to rally and it broke 30, I asked him, hey, are they talking about gold, silver, the miners? Any recommendations? No. Silver hits 35. Hey, anything yet? No. Silver hits 40. Again, no. 45, no. 50, no. 55, no. 60, no. So I've been asking, we're past 60, and all these Discord servers he's in that have investing channels, these people are not even in this sector. The Momo crowd is not in this. And if the Momo crowd is not in this, if the momentum traders are not in this, then your everyday rabble, the sheep, they're not in this at all. They don't have any exposure in this. So to summarize, I think if we want to get into triple-digit silver, we need the momentum traders in here. That's who we need. I think end stage will be the rabble. When the rabble join, that's going to be the final ride to the top. In the beginning of the video, I talked about how on December 19th, the Bank of Japan is going to make a decision on interest rates. And right now, over the course of the last several weeks, there's been a lot of attention on Japan because interest rates have been rallying. And that's really important because of the yen carry trade. And I don't want to take too much time talking through this. I'll talk about it a little bit. And I say that because a lot of the other gurus like Maneko64, there's another guy I like, Bald Guy Money on YouTube. He's talked about this topic. So I don't want to go into great lengthy detail, but I see this as a risk not only for AI stocks, but also for gold, silver, and the miners. And let's talk about that. And why I'm saying here why Japan can trigger a global margin call, because if the carry trade falls apart, it's not just the AI stocks, the Bitcoin that's going to collapse. Gold, silver, and the miners will go down in price because all the big boys will have to sell any and all asset classes to cover the loss on this trade. This addresses one of the questions that I see get asked a lot on social media sites about gold, silver, and the miners is, when are we going to see that first big, very sizable correction? And this could be that catalyst. So let's talk about first about what the carry trade is. So imagine you and I are given access to $1 million of credit, at 0% interest or maybe like 0.1% interest for like, let's just say 5 years. What would you do with that money? Wherever that money goes and the assets you start buying up, whatever it is, Pokemon cards, gold, silver, AI stocks, whatever it is that gets bought, it's going to push up the prices of that. And so when we talk about the yen carry trade, we're big institutional investors, they're borrowing yen at pretty much 0% interest or close to it historically. They basically then convert the yen via the FX markets with swaps, other instruments, and then they start buying up stocks, bonds, and crypto. And, they know, at some point in the future, we'll get to pay back the yen, which we borrowed at such a cheap rate, but we made all this money in those asset classes in the meantime. And so what I want to highlight on this slide is that you need the yen to be weak in order for this to work. The Bank of Japan just keeps printing for a long time, for decades. They have a huge debt, 260% of debt in terms of their GDP. They control the yield curve and keep the rates artificially low. And then the US JPY currency pair is rising, which means you have a weak yen. What's concerning is the size of the yen carry trade. In direct yen borrowings, they're borrowing like 1 to 1.5 trillion. But you got to remember the investment banks, they lend to big institutions. They let them lever up to the gills. They let them lever up 10, 15, 20 times the amount. So in total global exposure at the end of the day, you're talking about 8 to 15 trillion dollars. That's a huge amount of change, and that's big enough to move any major asset class. So whenever this happens, whenever this unwind happens, this is going to be the catalyst that'll make everything drop, including gold, silver, and the miners, substantially. But what happens after every crash that the central banks have proved to us time and time again? They're going to print money, and they're going to print a whole lot of it. We're in a situation where the country is so dependent on the stock market. Our wealth, people's retirement accounts, the 401ks, they're so tied to the markets. So I can't imagine a 1929 style depression. They'll have to step in and they're going to print. And they're going to print to keep the market up in nominal terms. In real terms, the market will deteriorate. But in nominal terms, not adjusting for inflation, they'll keep the market up. No, it's just not your 401ks. A lot of your big companies in this country, they have what's called non-operating income. That's basically income they are making outside of their core business. Just as an example, you have hospitals in this country that are subsidizing the business by their profits and their non-operating income. And what do I mean by profits and non-operating income? That means the money they have, reserves they have, and other cash equivalents that they have invested in the stock market. They're depending on the stock market to stay in business. Our economy is so intertwined and linked to the stock market that they just cannot allow it to just drop for more than a short amount of time. They're going to jump in, they're going to print to at least prop the stock market up in nominal terms. Right before we deep dive in today's featured coin, the 2022 Libertad, I just want to highlight a book I highly recommend, whether you're already invested in gold, silver, and the miners, or you're considering it, called The Dying of Money, Lessons of the Great German and American Inflations by Jens Parson. I highly recommend this book because it just really illustrates the devastating effects of inflation on people, how it's really like a hidden tax, a theft of people's wealth. So I highly recommend that book if you get a chance to pick that up. There are PDFs, free PDFs I've seen on the internet, so you don't even have to buy an actual book. First thing I want to highlight about the 2022 is something you can go back to the 2018 video, which I talked about in very lengthy detail and provided evidence, is essentially how there are enterprising folks who are taking a huge, sizable amount of these minted coins and colorizing them. And they lose their numismatic value at that point. They become kind of like art pieces. So I've been incorporating that into our mintage tables for the years 2018 onward. So if we go to our mintage table, Banco de Mexico's CM27 report, which has the mintages for the Libertads for the 1 ounce MS, 2022, they have published 550,000 pieces. But if we remove the 50,000 to 100,000 coins that are colorized and then become art pieces more than they become coins that maintain numismatic value, then you really have a true surviving mintage of 450,000 to 500,000 of them. Let's take a look now at our graded coin population reports from the two major grading companies, NGC and PCGS. On the NGC side, for 2022, there are 6,550 total graded. Of those, the top pop, the MS70, is 4,967 of those. On the PCGS side, a total graded of 4,930 with 2,811 of top pop MS70. And finally, let's look at the eBay sold comps for the 2022. Make sure you have your sold listings filter turned on and you want it sorted by the ended recently. And we're seeing a lot of graded coins here in particular. We have one that just went for $134 on MS70 on PCGS side. You won yesterday for $145.25. This one is MS70 on the NGC side. On that same day, a PCGS MS69, not the top pop, that went for $92. And now finally we're seeing here a raw one yesterday for $65. It's worth highlighting again something I've mentioned in a couple of videos, and that is sometimes it comes to a decision you say, well, I don't know if I should just buy the raw coin or if I should buy it graded, because I'm considering becoming a member at NGC or PCGS, paying the membership fee because I want to grade some coins. So you want to make the decision of, hey, how much is the coin worth raw? And then take into consideration what would be the membership fee at one of these grading companies, and then what does it cost to send in at least one coin. You don't want to send in just one coin, because if you send in a batch of coins, you get a better economies of scale. The shipping costs are diluted and distributed amongst a group of coins. But you want to take into consideration, hey, is it cheaper for certain years to buy graded or raw? You want to kind of calculate what is the membership going to cost you, the grading fees, the shipping fees, and then use that to make a determination of, hey, this particular year, to me, 2022, it seems like it's worth it that I buy a graded one, depending how you calculate the numbers, you make that decision. But I mean, you have a pretty sizable gap here of $65 on a raw one to $145 on an MS70, the top pop. So it's just something to think about that I brought up various times. Here on a couple days ago, we see another raw one. Looks like a best offer was taken, so it went for under $69. Let's find some other. We have some. We have an MS69 here, went for $75, not the top pop. Yeah, let's see if we can find some other raw ones. Yeah, several days ago, a raw one went for $58. Others went for $70.29, $71.28. So that kind of gives you an idea of the range between not just the raw, but then also the graded. That's all for today. Don't forget to like and subscribe as we continue to ride this secular gold and silver market.